Yes. What's going on, family? What is going on, guys? Welcome to today's stream with your boy Abel in the Profit Society team. Family, we're gonna go ahead and get started in about 5 to 10 more minutes. Right, about 5 to 10 more. We'll say 5 minutes, guys. We'll go ahead and get this thing on the road, right, for our weekly market breakdown. And I'm super excited because we have a lot to talk about today. Just to prepare ourselves, guys, going into this upcoming week. So I hope you guys are ready for that. In the meantime, go ahead and smash that like button. Go ahead and drop your locations in the chat. Let me know where you're tuning in from, guys, and we're gonna get this thing started very shortly. Let's get it. Yeah. What's going on, guys? What is up, guys? What is going on? Welcome to today's session with your boy Abel. Super excited to be here with every single one of you guys tonight, family. It's another day to go ahead and ultimately get better. All right, that's been the whole goal. That's been our mission here at the Profit Society, guys, is to give you guys enough value, enough information, enough knowledge, so that you guys can absolutely go ahead and really start to dominate. All right, because that's the biggest thing, guys, that we're after. It's just really giving you guys all the sauce that you guys need so that you guys can absolutely dominate this space, family. All right, so we're going to go ahead and get started. Let me just go ahead and zoom in my camera real quick. All right, that's good. Perfect. Yes. All right, there we go. Now front and center. All right, so what's going on, guys? Welcome to tonight's session with the Profit Society team. Super excited to be here with every single one of you guys. As it's another trading week that has just now started, guys, and it's another week for us to pretty much make some money, right? But in the process of making money, ultimately just really get better, so I know I'm excited for this week. It was a very, very interesting week last week for damn sure, right? So now we're going to see what we're going to be able to take advantage of, guys, going into this week for sure, right? So as usual, you guys know we definitely have to go ahead and start off today's session with the news calendar of the week, right? So that we are aware of what data is going to get released, because it's going to influence, guys, a lot of these currencies overall. So that's exactly what we're going to go ahead and get started with. But before we even do that, let's see who we got in the chat with us today, fam. I said we got Fifth Ward, Texas in the building. We got Baltimore stand up, ATL on the check-in, British Columbia, Canada in the building. We got Vermont, Kyle, what's up? We got Bahamas. We got the Alabama in the building. We got Chicago, Miami, Nigeria, Minneapolis, Michigan, Baltimore, Oklahoma City. We got Colombo, Sri Lanka. What is up? We got New Jersey, South Africa, upstate New York. We got Mass in the building, New Jersey, North Carolina, ATL. What's up? St. Lucia. What is going on, family? We got Chicago in the building with us today, Michigan. How about the Steelers? We're not going to talk about that because I'm a Baltimore Ravens fan, right? We're not even going to talk about today's game. Let's keep it strictly trading, family, because I'm hurt. I'm hurt on how my team ended up playing today and how we gave away that game, right? So we're going to keep it trading today, right? But other than that, we do got Charleston in the building. We got Jamaica, New Mexico, Toronto, Orlando, the Bahamas, Queens, Connect, stand up, Colorado Springs, Tampa, New Jersey, Buffalo, Trinidad, Stockton, California. It's the 757. Man, you guys are deep today, family. We got Mass in the building. Right, the Mafia, I see you. What's up, Jalen? How you doing? Tulsa in the house. London, UK in the building. Shout out to everybody that's located overseas right now, because it's definitely not a early time for you guys. It's probably past midnight for a lot of y'all right now. So big shout out to all y'all that are still awake, that are taking time out of your guys' night to actually go ahead and get this value, right? So we definitely appreciate every single one of y'all for definitely making that commitment, right? That's one of the main important things, guys, to actually seeing results here, right? Is making that commitment no matter what, for you to actually learn everything that you truly need to learn, right? So big shout out to every single one of y'all. Appreciate y'all so much for sure, right? So we also got Charlotte in the building. DMV, what up, right? South Africa in the building. I see y'all as well. Big shout out to y'all. Appreciate y'all. All right, but let's go ahead and get into this really, really quickly, guys, and see exactly what we got planned for this week. Now, I did scan this over a little bit earlier, and I know we do have a bunch of CPI data that's getting released, guys, for other currency pairs across the board. Obviously, we did have, CPI readings last week for the U.S., right, which really did shake the markets, right? We seen initial dollar strength to come in, but then immediately got pretty much erased, right? Which is going to tell us a lot, guys, when we actually do get into the chart work, so I can give you guys my breakdown, my opinions of what I believe is going to happen this week, but just seeing how the market reacted to CPI data last week really did, clarify a few things for me as to what can really happen next, right? So we're going to get into that. But let's go ahead and go over this really quickly, guys. So for tomorrow, we do have CPI data for the New Zealand dollar. So if you are trading New Zealand dollar, please be mindful of that, right? They are actually releasing their CPI quarter-over-quarter numbers, right? So that could definitely go ahead and shake the markets. We do have the RBA meeting minutes as well, which will give you guys an insight as to what the RBA is planning on doing, the Central Bank of Australia, right? So again, if you are one of those people, guys, that actually trades the Australian dollar, right? If that's one of your go-to pairs, one of your go-to currencies, then yeah, you might want to actually look into that meeting minutes to see what their plans are, right? Like to see what their plans are in terms of inflation, in terms of dealing with their economic weakness, right? Understanding what's in these meeting minutes, guys, could really, really help you guys understand what sentiment is going to be moving forward, right? So that's something to be mindful of. On Tuesday, nothing crazy. On Wednesday, guys, we do have some more CPI data year over year. We do have CPI for the pound and for the euro getting released, right? The pound is at 2 a.m., the euro's at 5 a.m. Expect volatility, guys, for this releases, right? We're talking about, I mean, their inflation is through the roof, right? Their inflation has been above 9%, right? Over here in the U.S., I don't even think, I mean, if we did hit 9%, it was only for, one reading, right? But they've been above 9%. In fact, they're expecting, their inflation to go all the way up to 10%, right? Which is absolutely crazy, right? So for those of you guys that are newer to the call, right, CPI, guys, stands for Consumer Price Index, right? It is an indicator that measures the strength, or not the strength, right? But it measures the change in the price of goods and services, guys, across the board for us consumers, right? For us that are spending money on a daily basis, right? So they're saying that their CPI, guys, is going to be at 10%, which means, right, from this time last year, right, the cost of goods and services has increased by 10% in a year. That is very, very insane, and that is very, very detrimental, guys, to a lot of people, because the majority of people in the world, I'm not just talking about for over here in the UK and in Europe, but across the entire world, guys, majority of people are living paycheck to paycheck, right? So most people cannot afford, this extra, increase in the pricing of goods and services, right? You can't afford it, right? So seeing things go up by 10% over there in the UK and Europe is absolutely crazy, right? But that also means, guys, it's probably going to force these central banks to even become a lot more aggressive, right? To try to tighten up a lot more to try to get this thing under control, all right? So that's going to be very interesting, guys, to see exactly what does come from these things. But just keep in mind, higher CPI numbers on when it actually comes out, could really, really shake these markets for sure. But that's something we'll be keeping our eyes on, guys, and pretty much just reacting to what the market actually ends up doing. All right, now we do have core CPI as well, guys, for the Canadian dollar on Wednesday, so that could definitely shake the markets for any of you CAD traders out there. All right, we do have crude oil inventories as well for the U.S. over here. Now, oil is definitely something, guys, that it's going to be a very, very interesting talking point moving forward, just because of, I mean, there's a lot of stuff happening in the background that we're going to eventually get into, right? But we're going to definitely keep our eyes on that oil inventories to see exactly what ends up happening for sure. And then going into Thursday, right, we do have the initial jobless claims. And that's probably going to be the only existing home sales could be of interest, right? Looking at sales of homes could give you some type of insight in terms of sentiment. But overall, initial jobless claims is probably going to be the one I'll be paying attention to on Thursday. And then going into Friday, guys, we do have retail sales for the pound and core retail sales for the CAD. Right, so that is overall our news for the week. Again, in my opinion, the most important ones are definitely going to be CPI readings, guys, because that's pretty much what every single central bank is really trying to combat right now is inflation. Right, so those are the ones that we're really going to want to pay attention to, guys, for sure. All right, so that's what we got for the week. Now, let's go ahead and get right into the charts, right? Like I said, I'm not going to waste too much time with you guys today. We're going to get right into the charts, and I want to really give you guys my outlook, my analysis, guys, as to what I think can realistically happen now going into this week, right? And I'm going to always start off with the dollar. The dollar index personally is just one of my favorite tools to utilize, right? To really figure out what sentiment is going to be or what overall dollar strength could be. Because if I could figure out the overall strength of the US dollar, then, I mean, it's literally doing majority of the work for me, right? I analyzed one chart, this one right here, and it tells me what all these other US dollar correlated pairs are going to do, all right? So it is very helpful in my opinion, guys, and that's why I like analyzing it, right? So with that being said, right, as you guys can see, we're here on the daily time frame, right? And what has been the trend, guys, of this market? Can you guys answer that for me in the chat real quick? Right, I mean, this is kind of very self-explanatory, right? Because it's literally right on the screen, but I want you guys to answer this question real quick, right? What is the trend? Right, what has been the trend here for the dollar? So what should we expect this trend to do? Right, should we expect this to just continue, or should we expect it to eventually turn around? Right, because right now, guys, we have been bullish, right? Not just bullish, but yeah, Jerome, right? Extremely bullish, right? Now, who knows why we have been extremely bullish, guys, for the US dollar, right? Let's see who's been actually paying attention on our previous calls, right? Who knows, okay, why we have been so bullish the US dollar? Right, go ahead and answer that in the chat, family. Right, who knows why we've been so bullish the US dollar? Now, there's a lot of different reasons for it, right? It's like a combination of things, right? It's not just one single thing, guys, that has caused the dollar to go as crazy as it has been, right? I mean, this thing has been going up for, I mean, the entire year, right? I mean, almost 2 years at this point, right? It's just been going up, right? But it's a combination of things as to why this has been going higher and higher, right? Let's see, rate increases. Yeah, rate increases is definitely probably the main thing fueling it for sure, right? So rate increases is definitely one of the biggest ones, guys, right? Now, rate increases is a direct correlation to why, or why were rate increases actually implemented, right? Who knows the answer for that now, right? Rate increases is definitely a reason why the dollar has been gaining strength, but you got to understand the dollar's been gaining strength for 2 years. We just started raising rates this year, right? So although interest rates going up has definitely continued to fuel this, right? There are different reasons, guys, before interest rates that caused this market to really start going higher, right? So let's see what each other, right? Let's see who's actually been paying attention, right? Interest rates up and inflation. Yep, inflation. There we go. That's one of them. High inflation, right? Top rates, weaker economy. Yep, exactly. Risk off sentiment with interest rate. Yep. Inflation, interest rate, CPI, inflation, and people out there, money's in safe havens. Yep. Inflation. Yeah, I mean, pretty much everybody is saying the same thing. More demand for the dollar since the printers are shut off. Yep, there we go, Christian. All right, that's definitely true. Interest rate rises to combat inflation compared to other economies. Yup. Yeah, I mean, pretty much everybody's saying the same exact thing, right? But you guys are 100% right. Now, there are a bunch of different, like I said, there's a combination of things, right? It's not just interest rates going up, right? Because interest rates are only going up because of how high inflation went. So inflation was the big thing that really started to drive the demand for the dollar, guys, through the roof, right? But it's not, again, not just that, right? We have to, take in count for what happened, during COVID, right? COVID is what really put us into a crazy situation, in my opinion, of course, right? Because with COVID, I mean, we've seen how much printing, has happened, right? They literally were propping up this economy, guys, to keep it, quote unquote, strong by simply just continuously printing and printing money. Right now, because of how much money was printed, right, that eventually was going to cause inflation to go through the roof, right? When you're giving people so easy, I mean, access to capital, right? That's so easy to get access to capital, and you're printing all these, and you're doing all these stimulus packages left and right. You're giving people so much access to money, and you combine all these stimulus packages and just how easy it was to get capital with lower interest rates, and you put all that together, right? And the fact that they just propped up this market, yeah, I mean, that's the big reason why this market really started going crazy, right? But going into this year though, right, with interest rates going up, with these central banks being hawkish, that is what only fueled, right? Only fueled this to really continue going higher, right? If you really want to look at this, guys, right? If we look at the chart here for the dollar index, right, we can see that we ended up bottoming out over here at around December, January of 2021. Right, January of 2021. Remember, we really didn't start initially raising rates all the way until like I would say January, March. Right. I mean, we can literally actually we can do some research and see exactly when the Fed started to raise rates. Right. I have to go into this and do a deep dive into this, but I believe they actually started raising rates, guys, in February or March. Right. I could be wrong. Right. But if you look at the chart. Okay, we were already starting to go up before they started to raise rates. But if you look at the difference, guys, in this uptrend right here, and then when we started actually raising rates, like once we started to raise rates, that just really started to fuel the demand. So again, because of inflation, because of COVID, because of all these things that were, a combination of, it started the increase already. But once the Fed turned hawkish, it sent it absolutely through the roof. Right now, family, this is the next question I have for you guys, right? Now that we understand this, right, should we continue to expect bullishness to come in long term? All right, we're thinking about a long term perspective, right? From a micro perspective, short term things could be different, right? But from a bigger perspective, guys, right? What should we expect to happen for the dollar, right? Are we going to continue bullish long term, or are we going to actually turn around and go bearish long term? What is your guys' opinion? Right? What is your guys' opinion? Let me know. Let me know in the chat, family. Right? Definitely go ahead and smash the like button as well, family, as you guys are tuning in. If you're getting some value from the stream, or whenever you do get some value, family, definitely go ahead and show us some love by smashing the like button. It definitely helps us out tremendously. It really allows YouTube to go ahead and push this content out a lot more to a more broader audience. So that's what we need. right? So the question that I have here, guys, now what should we expect the dollar to do? Let's see. Less printing money, quantitative tightening. Other central banks have not increased rates. Bank of Japan is negative rates. Yeah, Bank of Japan is the only one so far that has not increased rates yet, but that's also the reason why the Japanese yen has literally gone down the toilet. Like, look at this, right? This is USD JPY. Ever since we started raising rates, again, this thing just, been on a moonshot. The yen has been the weakest currency across the board for a while now. And it's because they haven't, started tightening up yet. All right, so the question that I asked here, guys, is what should we expect the dollar to do long term, right? Well, very simple. When we're trying to figure out, guys, what these currencies could do from a long-term perspective, like, yeah, you can utilize technical analysis for sure, right? But if you really want to, be extremely confident, guys, with long-term direction, really start to understand the data, right? So from a data perspective, a fundamental perspective, guys, we are still very much bullish, right? As long as the Fed is hawkish, as long as the Fed's goal is to continue to raise rates, right? As long as we continuously see inflation, guys, at 8, 9, even 7%, we should continue to expect the Fed to try to fight that, right? And the Fed is going to continue to raise rates, right, which is going to cause the dollar to continue to go up until they have a reason to change course. Right now, a few reasons, guys, why the Fed might actually reverse course and go from quantitative easing into a quantitative tightening approach. I mean, there's a few things, right? Unemployment. If unemployment starts to tick up higher, right? If we do start to see unemployment get into that 4, 5, 6% level, unemployment, then you best believe the Fed is going to eventually want to change course, all right? Because a big reason that they haven't really been as aggressive or as aggressive that they could have is because we still technically had a very, very strong labor market, right? Which was, in their opinion, even with interest rates going up, it will still keep the market, or at least the economy, somewhat stable because there's still a lot of people that are working, which will still end up low-key stimulating the market, right? So that's one factor. Another factor, guys, that can also really change sentiment overall outside of unemployment, it could be CPI, right? If CPI does actually start to turn around, right? Right now, we are starting to see CPI finally plateau, right? For the past 2 readings, I believe we actually came out negative than the past one, right? So we have been actually seeing it finally, at least over here in the US, find somewhat of a plateau. Now, does this hold is the question. I personally don't think that it is going to hold, right? I could be obviously wrong. I'm no psychic, but I don't think it's going to hold, right? So if it does not hold, and if we continue to see higher inflation, then yeah, the Fed is going to continue doing what they've been doing. But if we see it turn around, like if we see inflation, guys, or CPI get into that 7, 6% level, now that's not going to say that they're going to stop raising rates, right? Because the goal is to get it to 2%. 6, 7% is still a freaking long way to go, but that will bring some type of sentiment, or it could bring a sentiment shift in the market because we are starting to see it turn around, right? A lot of the smart money guys, they're going to want to start to position themselves, right, before it's known to the public, right, before everybody else is really catching on that inflation is finally under control, right? So again, they could shift sentiment, the Fed could change sentiment, which could really change the whole thing if they actually start to see CPI numbers start to finally come in. Right now, again, there's a lot of other things as well, guys, that could really cause the Fed to do a U-turn. Even looking at things like GDP, gross domestic product, right? Really seeing if our economy is contracting or expanding. We've seen 2 quarters back to back of contraction in our economy, right? No growth, negative growth overall. So if we do continue to see another quarter, guys, or if we see the next 2 quarters negative as well, then that is another thing that could really cause the Fed to actually U-turn and go ahead and change course, right? So there's a lot of different things, guys. There's a combination of things right now that the Fed is paying attention to, and they're going to make a decision on whether they want to keep on, raising rates, or if it's time for them to actually go ahead and U-turn, right? So that's just a little outlook, guys, as to what's really happening from a fundamental standpoint. We are still very much bullish the dollar as a whole. As long as the Fed is hawkish, then we're hawkish the dollar, right? As long as the Fed is hawkish, then we're bullish the dollar, guys. And just literally just keep that in your mind. That is a nugget. As long as the Fed is hawkish, which means they plan on raising rates, Okay, write this terminology down. You're gonna hear it a lot, especially when you start to dive into fundamentals. Hawkish is referring to a central bank stance on interest rates, right? Are they planning on raising rates, right? Because if they are, then they are a hawkish Fed. If they're planning on lowering rates, see, that is what's called a dovish Fed, right? And based on those sentiments, guys, whether they're hawkish or whether they're dovish, it's going to dictate what the dollar is going to do. It's going to dictate what the indices are going to do, like NAS100, SPX, US30, right? I know a lot of you guys love these indices, right? So depending on what the Fed is doing, their sentiment, whether they're hawkish or dovish, is literally going to dictate long-term direction for a lot of these assets that we trade. Okay, so overall, you understand what the Fed is doing. You should understand, guys, what these currencies are going to do. You should understand exactly what these indices should do. You should understand what gold is going to do. So just make sure you're aware of this stuff. And that's why we like to bring this stuff to you guys here on this channel, so you guys are aware of exactly what to be aware of, right? So that's a very interesting breakdown, guys, in terms of fundamentals and just analyzing it and correlating with the dollar as a whole, right? So for me, my outlook here for the dollar, I'm going to keep it very big on a higher time frame, guys. But, if we're able to see price pull back down, that would be pretty lit. I would like to see it come right back down to these levels of structure to then go ahead and eventually, look for higher pricing, in my opinion, right, leading up into next month, right? So very simple outlook, guys. I do think we probably could see a little bit lower pricing. So if we are able to get down to around this 110 level, then I think we could really start to look for some more bullish price action for gold, or for dollar, I mean, and just continue with this uptrend that we've been experiencing, right? Sentiment has not changed. So as long as the sentiment does not change in terms of the Fed sentiment, then, I mean, consumer and investor sentiment is not going to change neither. Right? Smart money is going to change their sentiment, guys, when they see that the Fed is changing the sentiment, right? So understanding Fed sentiment is really going to be that sweet spot for y'all, right? If you can understand what the Fed is doing, you know exactly what else is going to happen, okay? I hope this is making sense, family. Like, this is some sauce. This is some value, right? That could really take your trade to a whole nother level for sure, right? So this is what I'm looking for the dollar. We'll see what happens with this overall, guys, because I think it is very interesting to see. Now, another currency, guys, that I'm gonna be looking for into this week, or the one currency I'm gonna be looking to play into this week, and this is something that could really realistically actually take advantage of tonight, guys. This is an opportunity you guys can look at and keep your eyes on. Is this Euro USD? Right now, again, Euro USD, I do think we are going to continue long-term bearish. Long-term, I believe we're going to continue to be bearish, right? But I think from a short-term perspective, there could be a nice opportunity, guys, for us to catch a nice little buy here going into the start of the week. All right, so overall, long-term, we are definitely bearish here, right? And we're going to be bearish as long as the Fed is hawkish. Euro USD is going to continue selling off, all right? But from a short-term perspective, I think that there's a good chance for us to really catch a nice buy opportunity, guys, going into the start of this week. And that buy is eventually going to end up leading into a bigger overall sell, right? Getting us back into the overall trend that we've been pretty much watching, right? So that's definitely going to be one of my go-tos for tonight. It's going to be this Euro USD position. See if we can actually go ahead and get filled, down here at this 0.968 level. If we're able to go ahead and get filled from down here, then I'm very interested in seeing if we can ride this thing up to go ahead and clear these highs up here, guys. It could go a little bit higher, but I don't care for that. I'd rather just go ahead and just take profit up here at this 0.984 level, or 0.983 level. So that's gonna be probably my main focus going into tonight. I know there's a bunch of other pairs too that I'm looking at, but it's not myself on this call. We do have the team on the call with us today. We have my guy, Mr. Skaggly Waggly. I don't know why I said that publicly, but Mr. Skaggly Waggly in the building, right? We also got Mr. Wall Street Ray with us tonight as well, right? And they're going to pretty much break down a bunch of these pairs too that I'm also looking at, right? And like these dudes, like the way that they break down the analysis, guys, is next level, right? Like, you guys will see what I'm talking about if you guys have not seen it just yet, right? So without further ado, though, I actually want to go ahead and bring up the guys, right, so that they can go ahead and start giving their opinions on the markets, their opinions on fundamentals and all that good stuff, right? So we can really start to have a nice deep discussion on what can really happen for this week, right? So family, without further ado, my guys in the chat, what's going on? Skaggs, you there, my brother? Ray, you there, my brother? What's up, man?
We here, man. We here. How you feeling today, folks?
I'm feeling phenomenal. All right, I'm feeling phenomenal. So much so, I called Skaggly Waggly on the call.
Yeah, it's like you got to keep that one in house, man.
That's
But
a
yeah,
fact.
man. Feeling blessed, man. Feeling better than amazing today. Excited for another great week, man. Last week was fire, and it's crazy because I started a little slow, and then I want to say Thursday and Friday we kind of just turned up and went crazy. So, I'm excited for another great week, man. No complaints on my end at all, man.
Let's get it. Let's get it. So you got anything you want to look at for the family?
Oh yeah, sure thing, man. Sure thing. I'll go ahead and share my screen real quick.
Let's get it, family. Drop some sevens in the chat, guys. Drop some sevens in the chat for the boy Wall Street Ray, because I know for a fact his analysis is going to be probably one of the best analysis that you guys ever see when it comes to really understanding smart money concept, right? So all my smart money traders, be prepared because you about to get some value.
Word, word. So, overall, I do agree. I do just want to, sell down to your buy. I know you was looking at, the potential for buys within this area. And I'm open to that concept as well. One thing that I don't necessarily like is the amount of seller pressure that we have within that candle. Before we actually turn bullish. And, even going back to, I want to say Friday, I think it was, where, that news release had dropped us bearish. And, we had kind of caught some EU buys when Skaggs had, he was being a little degenerate a little bit and took the buys. And I'm just of the mindset that the buys are premature, or not even premature, but temporary, I should say. And, I think that we can actually, trade down a little lower into, maybe this point of interest a little bit more, because although we did fill that wick, there's still not a lot of volume within that low. So, I definitely see all of this buying pressure here. And, I do agree that there is a chance we could turn around. I do just want to take a sell opportunity, and whether or not we actually break these lows or not is yet to be determined. But I know what buy you're looking at, and you're looking at, a buy somewhere in here, or even down here, which is 100% valid. One thing I do know is that these lows ain't holding, right? These lows are not going to hold, in my opinion. So, I am short term bearish, long term bullish on this particular pair, right? Now, what it is that actually has me, compelled to take some sales here is because obviously we did have this, huge bullish reaction. And now that we're actually sweeping highs and pushing lower, here we swept some highs. We also swept some highs here, right? Now, I don't get into, all of the wick off and stuff all too much, but one thing I do know is that, when we're actually reaching these areas and, especially going sideways, taking liquidity, and then we actually start to push lower, um, you know, in my personal opinion, we are bearish in the, current market. So just with that, I am looking at these certain areas where we had this buy to sell candle where we came in and somewhat mitigated it, didn't mitigate all of it, but I feel like we did tap enough into that area. And then as I come into the 5 minute, you see that we're sweeping highs, but so we're taking liquidity amongst the highs, where we swept highs here, we swept here, we also swept here, right? And I'm doing this on my laptop, so just bear with me. So, we're sweeping highs, but we're creating weak lows, in my opinion, right? And these aren't necessarily sweeps. If I'm just analyzing the strength of the lows are, very suspect, in my opinion. And when I see lows that I want to take trades from, I need to see a lot of volume in it. I need to see, some imbalance created. I need to see, large bullish engulfing candles, which is where pretty much where the imbalances come from. And just the fact that I don't necessarily see that right now, I am bearish in this current market, right? And even here we see we created a high here, and then we swept this high here. And if you guys know how I trade, this is a hezzy. because this is a low that makes a new high, and then the market comes down into that area of demand. We hesitate, sweep a high, and now we're attempting to go lower. Now, since this area did sweep highs, and and y'all know me, I like trading on the smaller time frames. It's all fractal. Some people like it, some people don't. I feel like if you know how to analyze any time frame can be very beneficial for you. And just to give you guys a little pointer on why I choose to trade on some lower time frames is because trading is all about a battle of wins and losses. You're going to win some, you're going to lose some, as long as the outcome is income, right? And in my personal opinion, if I can trade on the 1 minute or the 5 minute, I know I'm gonna get through I'm gonna get my data a lot faster, if that makes sense. So if I need to take 10 trades, 20, 30 trades to be massively profitable, right? Like massively profitable, I want to get to that point as fast as I can. So, not necessarily rushing anything, but just realizing that the more opportunities I take, good opportunities that is, the more profitable I'm likely to be. So just with that, I'm seeing all these equal lows form. I'm seeing these weak lows that don't really sweep anything. So that's why I feel like this is all building liquidity. All right. So as we're building liquidity within this counter trend, I just want to see the market sweep up and take out this internal range liquidity here. All right. Now, the reason why this is internal range liquidity for me is because we have this hesitation off of demand. Okay. Now, this is a bouncer break situation right here, right? Now, since this is a low that makes a new high, hypothetically speaking, this is a area of demand. Now, considering that the market hit this area of demand and didn't continue higher, right? It didn't prove strength. So it hesitated, then it crossed over bears, right? Hence why the name of my strategy is called the Hezi crossover, right? Obviously, it has smart money concepts, inside of it as well. But I'm a big person on, pretty much not just articulation, but the way you perceive the markets, the way that you actually understand the verbiage and stuff like that is something that's very big in your understanding of what you actually see. So all I technically look for is these areas of demand to fail, and vice versa if I'm looking for a buy, right? So the fact that we hesitate off of demand right here, then we fail, I hesitate, and I cross over bearish to the downside. Now, based off of the strength of the hesitation, that will tell me whether or not it's going to be internal range liquidity in the future, or if it's going to be a high that I could trade from. Now, when I say internal range liquidity, all I mean, technically speaking, is when this market is trading back up, all right, there's highs within the range, right? So if this is my high and this is my low, there's going to be highs within that range that I need to take out before I push lower again, right? So based off of how this hesitation happens off of demand, right? Based on how this hesitation happens, I will know whether or not the market's going to take that area out before it continues down. So considering this, we didn't actually take any liquidity here, right? So considering that we didn't take any liquidity, we could assume that, this is going to be used as internal range liquidity. Now, this is going to be the top of my range right here. And then this is going to be the bottom of my range, at least for the time being, right? So I feel like the market will at least get back down to this point here. So I would like to see this market trade up. I wanted to consolidate a little bit longer. Obviously, we're not in session yet, but if we can consolidate a little bit longer, I personally don't even care if the market drops a little bit. That would just be buying me more time in order to trade in session, right? But at the same time, I do understand that, we are, creating our Asia session range. And, this market could very well sell before London in order to manipulate the lows of the range and then continue for London session. All right. So those are one of the two options that I see going on right now. Um, you know, that's pretty much it though. So that's Euro USD. I'm bearish. Then once we get to your zone, I'll see how we start reacting. I personally would like to see this low get taken out. Um, just due to the fact that I feel like that buy was all manipulation. If we're looking at the data that was released, the data, I forgot exactly what news event it was, but whatever the data was, it made the numbers, the numbers were essentially in this move right here. So I remember we were all kind of not necessarily confused, but we were kind of, slightly surprised to see all of that bullishness. So if the data, if we, I know you're a sentiment trader and heavy on fundamentals. So if we are going off of the data, this move is still valid. So just with that, I think that buy is manipulation. I feel like we will continue on the sell side to take out those lows. And then from there, I'll be interested to see what happens after that, right? So as to that, I'll take a look at a couple more because I know the man Skag's gonna hop on and go crazy as well.
Yo,
So
I
I'm
really
gonna
like
take
how you broke that down though, because you are right. This could very well all have been manipulation for sure, and we just go right back in the original trend that we've been in. Dollar strength. So that's very
right.
possible for sure, bro. I like that outlook.
Absolutely. And I feel like this, pocket of liquidity right here that we actually tagged into, that was a reason for the market to, retrace back up and, even take some liquidity on the upside as well. But now that, if I just take a look at this, where we swept highs and then made new lows, we still respected this area of supply up here, right? So even that, like that buy move, as aggressive as it was, I feel like it was just some market manipulation, honestly, because we're still respecting supply, right? And now, as we're continuing to sweep highs, make new lows, sweep highs, make new lows, sweep highs, make new lows. Like if you just really go high by high and just trace each high, we're sweeping and creating on the downside. So for all the people that don't know what I mean by that, when I'm trying to identify a trading range, I like to see what high is taking liquidity and what high is, or excuse me, what side of the market is creating liquidity and what side is taking liquidity. So if I have lows that are taking and highs that are creating, I know more than likely I'm in an uptrend, right? Because I need to go take that high. And then vice versa, if I have highs that are taking and lows that are creating, more than likely, okay, this market will find a resistance somewhere and then continue back down. So me looking at this, I see my highs are taking, but my lows are creating. So that's the reason why I want to personally sell down. And then, once we create a strong low, if we create a strong low within this point of interest, I definitely want to take a trade. But the reason why I'm targeting this low right here is because essentially I want to see the market take that low. And then I'll have that strong pattern right there where it's like a strong W, if that makes sense, right? So if when I get this strong W, that'll essentially be me sweeping that liquidity. Some people call it turtle soup. I don't know why ICT calls it that. It's kind of a weird name in my opinion. I just I like strong low a lot better. But essentially what you want to see happen is the market will create a low. And this low will probably be suspect, right? And then the market will go and take that low out. Okay. And then once you take it, right now, you have more strength behind that move. So now that you have more, this low is altogether more strong because it took the liquidity that was resting underneath the first one. Then you can go ahead and get that bullish push, right? So the reason why I feel like that's going to actually happen is because this one barely swept. And since it barely swept, I feel like it can get challenged again. There's also not much imbalance here as well. So that is something that is somewhat problematic for me. We do have this imbalance here. So that's why I do want to see what happens there. But if we don't respect here, I'm definitely feeling like we're going to go ahead and attack that low. All right. So that's my analysis on Euro USD. I don't even have the stream pulled up, but is anybody asking questions? Like, I'm on the Zoom right now, so I'm not on the actual YouTube. Let me check. I'm gonna check my phone real quick, see if anybody has any questions. I don't want to just keep talking forever if somebody does have questions. So let me see. Okay, nothing so far. Nothing so far. Let me know if y'all got some questions, man. I'm looking at the chat box right now. Let me know if y'all got anything for me just before I go ahead and pass the mic to Skaggs. Anybody have any questions? Are we understanding? Y'all understand what we got going on right here?
Yeah, now your analysis was crazy, crazy, crazy. So I'm pretty sure that's all they're saying.
Say less, say less. I appreciate y'all, man. We work hard, keep putting that chart time in. And like I said, I don't want to go on too much of a rant, but just realize, guys, if you're not where you want to be, technically right now, and with your technical analysis and stuff of that nature, just submerge yourself into this crap. 6 months is gonna go by either way. 2023 is gonna get here regardless if you put the time in or not. So you might as well really put your head down and progress, because that's all I do, man. Even at this point in my career, I still study every single day, and that's really what it's about. You got to chase growth and not chase profits, believe it or not. And the profits, once you become the person you need to be, you're not going to have to ask a single question about whether or not you're going to make money or not. All right. But I appreciate you guys' time. I'll probably hop back on a little later, but I do just want to make sure I'm passing the mic, and we'll probably have our roundtable talk about the charts and stuff. But I do just want to make sure my man Skaz gets a chance to speak as well. All right. So that's all I got for right now. We'll bounce back in a sec.
Let's get it. Let's get it. Skaggs, are you there, my bro?
Yes, sir. My
Let
bad, guys. I've been over here fighting with some website stuff. Y'all know the way that goes, trying to upgrade and make the platform as good as we possibly can for you guys. So yeah, my bad. I've been a little a little distracted, but it's okay. Ray definitely just threw down. I did want to quickly give my opinion on EU since that's what he just went over. As you guys know, we did take this last week. I still do remain in some buys from down here. However, I do want to say I mostly agree with what Ray was saying as well about this low, having the potential to get taken at some point this week. I do remain long from this area. I have booked partials after we had this kind of erase of the move last week. I ended up securing some after we kind of took this high here. But I do remain partially in this trade from these lows, and I will do that until, again, like Ray said, until we see some reaction from up here. If depending what happens on this wick fill, I'm looking a little higher than Ray is personally. I feel like if this is going to move up, it's probably going to fill this wick. If you guys pay attention to the way that I analyze these wick fills, are a very, very common thing that we're looking for. In fact, it was a big reason why we even took these buys to begin with, again, because we were filling wicks in pockets of liquidity. So pending what happens up at this wick, I make an ultimate decision of what I do with these remaining positions. For those of you guys that may or may not be in that trade still with me, I do want to, again, as always, I'm always holding a portion of my trade, right? So I am about, 35, 40% out of this position. I will look to hold 20% of it long term, regardless of what happens. It's just a matter of what am I going to do with this kind of remaining, 40% that I could still kind of close out, right? Am I going to find my exit up here? Or am I going to try to hold into some of that CPI news that Abel was talking to you guys about, because they are expecting CPI to come out higher, which will lead to the idea that the ECB could possibly get more aggressive on rates. But at the very least, right, another rate hike is coming for the ECB, which we already knew anyway. That's not really a surprise to us. But if they do get an uptick, the possibility that they get a little bit more aggressive is on the table. So I'm not going to be looking to, immediately exit, but pending the reaction up here, I might have to, just for the sake of, again, these lows just building up more liquidity. And again, sentiment kind of, does suggest that the dollar will kind of continue. Another reason is typically when you see a move like this, that erases the news, this builds a lot of hope in the market. And last week I had a lot of hope as well. And I was pretty hopeful until I seen what happened here, right? We kind of spiked up again on more economic data, and we weren't able to keep this move sustainable. So the biggest thing with me is like whenever you get a nice momentum move like this and a nice erase of a news events, typically the reaccumulations are very clear, right? Typically the reaccumulations very smooth, it's easy, a lot of demand comes in, and you continue fairly quickly. The fact that we've just made really efficient price action, and again, we haven't really been able to show any signs of strength in here. Again, there's a lot of volume inside of some of these moves, right? A lot of volume in this area, but we weren't able to, again, break this main supply. So it has me a little cautious, right? Again, at the end of last week, you guys might have said, well, bro, you sounded very bullish last week, and you're right, but as the market gives me more data, I have to be more aware. So I'm in alignment with Ray. Again, I'm not going to bore you guys with more EU analysis, but just understand I will be managing my positions as I see fit with this. What I wanted to go over more or less was actually oil, because oil is probably going to be my main focus this week personally. And that's because we have finally taken the liquidity that I've been waiting since last Sunday for, right? So if you guys missed last Sunday's call, all right, to get a full idea of what I'm looking at on oil, would be best to go to last Sunday so you guys could see me actually saying that we were going to get this pullback, all right, and wipe some of this reaccumulation. So I could actually now update my little tag here, because we've now officially taken this liquidity, which is perfect. Actually, I mean, it's not even really that range as much as it is just this wick here. So we can just now confirm that we have taken this, filling out these wicks. Again, filling this wick. Again, you guys can see the wick fills that we're playing. And yeah, based off of this, I'm really going to be trying to play oil to the buy side all week. Whether or not this very specific low that filled the wick will be our low is remain to be seen. I don't like to assume that, on a Sunday, we're just going to see all up and like no attempt down whatsoever. We haven't hit New York session. We haven't had any actual volatility come in this market yet. But based off what I'm seeing, I do, want to begin trading this to the buy side. And as you guys can see, again, we're going to be targeting, about the 100, 102 level. Obviously, we'll have to, come and fight this 97 area first. And before even that, we'll have to fight, just the last week's highs. But nonetheless, again, we are going to be looking to trade this bullish. If I break this down in the 15-minute, let's go back to the 4-hour real quick. Right, there is like the potential for, order block type action here. Again, whether or not this is going to be the low, I have a little suspicion about that being the actual low, right? I wouldn't be surprised if we take a little bit more liquidity here and then go up. So looking at the 15-minute, we'll kind of break this down on lower time frames. Again, you have unfilled wicks here. So again, right, is this low strong, as Ray would call it? Probably not, right? This is probably isn't that strong of a low, but I do suspect that we will cycle out here a little bit longer and formulate a stronger low in the future. So what I'm going to be looking at specifically probably tomorrow morning, because again, I want to, start striking on this um, as early as I can, really. I'm not really looking to wait to play this midweek. This is like an early week trade for me, something I'm going to try to ride out all week. So what I'm going to be looking for again is us to come and play into some of these inefficiencies here, right? It is possible maybe, we just play kind of into the zone. Actually, let me not use lines for my areas of imbalance. All right, it is possible we kind of come play in this imbalance, or as I call it, an inefficiency. That text is way too large. And possible that we hold here. But what I would ideally like to see is, again, us come bounce off of here, create some more liquidity, grab it. And then once we get a spring, right, shout out to my wipe off traders, or a sweep of the low, I'll be looking to take this to the buy side. Again, I'm not going to bore you with all. Actually, I'll show you guys exactly why we're looking at this. So the main reason we're looking at going to the buy side on this is a few things. One, I firmly believe this is a protected low. So I firmly believe that we won't necessarily see below 76 on oil. And to be quite honest with you, I don't even think we see back down to below to 80. So I have a lot of reason to believe that the gap that we have here is a fundamentally based gap. Right? It's logical. There's no reason for it to close. And a lot of this action here is pretty efficient. Now, the reason why, again, I'm still looking at a spring is we do have, this area of imbalance that we can kind of still come capture, which is, again, perfectly aligns with us building up more liquidity and being taken. So I do suspect oil to stay at the very least above 84, right? This is all based off last week. Now, 2 weeks ago, we did take out this high and we made that move off this, right? You'll see on my tag here, I have something called a change of character. And if you don't know what a change of character is, I did go over it last Sunday, but it's basically the first time that structure breaks the trend, right? So you have your downtrend, right? You break that structure, and then obviously you're looking for it to continue. But not only does it need to break this structure point, it also needs to do that on something what we call higher effort, right? And we measure effort through volume. So if we kind of take a look at when we made that move on the daily, right, which is all one candle here, if you notice the candle that we did that on, right, actually was some of the highest buying activity that we've seen. So for me, this is actually a very valid reason for us to begin looking for buys. But I did tell you guys last week, again, we're not a buyer at the high. We do want to see that correction first. So now that we've gotten this correction, again, I'm looking to buy. You can also note that in this entire pullback here, the selling effort does not supersede the buying effort, right? So as far as I'm concerned, buyers still overall have control. If I come down to the 4 hour, same thing. If we look at all the volume profiles, sellers attempted to put more effort into the market here, but they really didn't supersede much. And then again, more buying activity comes in on this candle. We've now wiped that, but again, happening on lower effort. So everything points to me with weak sellers, strong buyers, since we've created this change of character. So I will continue to trade this to the buy side. If we break below the 84 level, I may have to, I'll humbly take those losses. That's going to be a part of the game. That's the game that I play. I had all my reasons for buying. I'm not going to be upset with myself. But if we do break below the 84 level, I will have to kind of reconsider this bias and maybe explore the idea that this gap will eventually close. So for those of you that are following this analysis, and for those of you that are going to be live trading with us this week in the back end of the Profit Society platform, which by the way is free, head over to profitsociety.co. Make sure you guys can grab your beta spots. This way you guys could trade live with us free. You could actually execute on this oil position with me. This is what we'll be looking at. Now, again, I keep it short, sweet, and easy, right? This is probably my most primed setup of the week, right? This is the thing that's, in my opinion, most ready to go. So 90% of my trading focus is going to be on monitoring this and spotting opportunities for me to take this position. Again, Euro USD is easy. I don't have to do anything on Euro USD. I'm already in it from last week. Other things that I trade like NASDAQ, I don't have to do anything on the NASDAQ. I'm still holding partial positions from here. And just like Euro USD, I did scale some out over here. So I'm already paid on this position, holding at break even. Right, my job is done. This is not really an environment that I want to trade. UJ, we did end up taking that little bit of a whatever it was, 20 pip loss on this. Again, as I said last week, the yen is the absolute worst thing to have have faith into for strength. So oil this week, again, guys, 90% of my focus is going to be on catching an entry on this to the upside. So let me know what you guys think in the chat. Are you guys going to be bullish or bearish oil this week? If you guys have an opposite opinion on me, that's great. There's no problem with that. I hope, that works out the best for you, while also allowing me to profit. Right? Because I don't want to wish us both a loss, but at the end of the day, one of us will be right or wrong. But let me just tick over to the chat real quick. Let's see what we got in the chat. Let me read some comments here. Let me see. I'm short on your USD from 97.40. Should I keep the trade on? That's hard for us to say, bro. We don't know the way you trade. Alex is asking Ray a question. Yeah, Ray does a lot of 5-15 minute stuff. He's like me. He uses all time frames, family. Let's see what we got. Shout out Cody. What's going on, Cody? How about USD CAD? I can look at USD CAD since it correlates with oil. Somebody said sell on XRP. JPY intervention this week. What pair is this? Yeah, this is oil. So family, I use the futures chart for oil, right? So I use CL1 exclamation point. And the reason I use this, for those of you that don't know, right? A lot of you for oil probably use the US oil chart, which there's nothing wrong with that. This is fine for you. If you use volume, however, if you go to the daily chart, you don't get volume profiles, which is incredibly annoying. So if you want that volume profile on oil, you do need to go to the crude oil futures chart, and then you will actually have those volume profiles. So yeah, if you ever see CL1, that's just what that is. That's just me using the futures pricing, which I believe anybody can use, but I do have the paid version of TradingView, so it's possible some time frames may not work with this chart if you're on the free. Let's come over here to real quick. Let's see. I think thank you, guys. I'm seeing higher highs on the oil side myself. Yeah, absolutely. Also in the oil trade, filling in the imbalances of the market to the buy. I mean, there's going to be a lot of imbalances that are going to remain open. I mean, technically speaking, there's a lot of imbalances down here, right? I mean, the gap is by technical definition, also an imbalance. So just because you have imbalances doesn't mean that price is always going to move to them, right? Once you have protected lows and you have an intact trend, these imbalances and inefficiencies will come back later to eventually get filled, but they could stay open for quite some time, right? Just like you have, this area of inefficiency that we're still looking to target because this really never got filled. It got tapped a little bit, but never got filled. I mean, you could find inefficiencies everywhere that remain open, right? Like, look how long this inefficiency or imbalance has been open, right? Like, there's, imbalances and inefficiencies even, up at these highs. Inside of here, there's still some. You're always going to be able to find an imbalance or an inefficiency that remained open and will, need a longer term bias or perspective to come back to. So don't get too caught up in that, right? It's a great thing to trade into when you have logic, but not every inefficiency is going to close. Which indicator do I use to get the volume profile? It's just volume. I deleted all this stuff from my top, but if you just search volume, it's just basic standard volume. There's no settings to it. The only thing I recommend you do is turn off the moving average. The moving average doesn't really do anything for you unless, again, you for some reason want to see the average of the volume. And then just make sure the candle color matches the profile color here matches your candles, right? So you want the buy side volume to match your buy candles, and you want the sell side volume to match your sell candles if you have a unique color scheme like I do. Let's just take a look at USD CAD because I see a few people asking about it. Again, I am bullish oil which is typically seen as good for CAD. Now, can anybody tell me why? Right? Somebody throw in the chat real quick why oil would be good for the Canadian currency. Right? Why do when we see a bullish oil, do you typically see a bullish CAD? That doesn't mean you always will. There is, times where they're not fully correlated. But typically speaking, there is a small correlation there. As far as USD CAD goes, yeah, I mean, when I look at this from like a Wyckoff perspective, you have this incredibly high selling effort, which some people would argue created a new low. But that's not really I don't know. For me, all you did was fill the wick. I would have liked to take out this low on that much volume, to be quite honest with you. But nonetheless, you have a lot of sell effort here. You also have very aggressive buying activity on the way back up with a lot of effort. Now, again, though, this effort here does not supersede the selling effort. All right, this is what we call a price action to effort divergence. All right, so the market is trying to move up and create a new high, is not able to do so. All right, so you're going to assume continuation on sells here. Let's go down to the 1 hour. We can already see this is kind of dripping down. Let's go to the 15-minute real quick. Okay, so this candle remains a POI for me. If I wanted to get into a sell, I'd prefer it to be above here. I know there's a lot of people that would look at this as an order block that got retested. That's not how I would play that candle. I would play the top of this candle. However, again, the market is going to play from efficient price action to inefficient price action, right? What do we have up here? Very, 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 very efficient price action. Not many imbalances left, and you can see the market is dripping down to fill a lot of this. So it's going to be a question of whether or not price can actually revisit these highs. Yeah, see, you have that same stupid the opposite of this candle, right? Down here on the 5-minute. Yeah, these highs are super questionable to me. I don't think they're gonna hold, but there's nothing really that I see that's gonna drive price back up either. Yeah, I would wait until we see another rally from this. I would need more data. I'd be interested to see where this stops on its journey to find demand. And then from there a clearer picture could be had. Because you can say maybe we'll come back up above these highs, play into this continuation block, and you could play something like this, a short to the high, playing off the idea that, this is, again, all very efficient. But if this doesn't make it all the way down there, then this is probably going to pull back a little further, and I'd be much more interested in going short right above this area here. I don't think this order block, 1, is not a valid order block for me. 2, I don't even think it gets retested. So I'd probably be looking to go short here with my stop at the high. And then looking to ride this down into probably into some of this area here, just for the time being. So that would be my setup again. If we wake up by tomorrow morning, and again we haven't really quite went anywhere, then I would expect us to retest this 139.35 area, and then kind of drop, come take out this liquidity. These lows shouldn't hold. Again, this low is waiting to be captured. This wick, again, like Ray says, this is a lot of internal range liquidity, as he would call it. or stuff that's kind of being waiting to be taken. So it's just a matter of like, can you get a good enough price? Because this is like, I'm not going to chase this, and this is not really all that appealing to get an entry inside of. So that's what I would want. Again, I don't think the market is specifically going to give it to us. But if I had to build a Sunday plan, that's what my Sunday plan would look like. Again, I don't like to delve into the world of like crazy futuristic analysis, right? I like to look at the thing that's most ready to go, and this doesn't scream most ready to go, right? It doesn't scream ready to go to me like oil screams, almost ready to go. Like we should be able to grab an entry within the next 24 or 48 hours at the most on oil if this is going to work. USD CAD gives me the idea that you're probably not going to grab your preferred entry in the next 24 hours. So again, like me making up ideas of where it can go and what it can do and where I want to see it go, you're dealing in a game of there's too much randomness, right? Forecasting set 72, 90 hours out. But yeah, any questions on that family? That's all I'm really looking at, right? My week is going to be easy. I'm going to be an oil bull most of the week. Um, yeah, Abel Ray, what do you guys have on that? You guys riding this oil with me or what's good?
I mean, you know how I feel about the oil. Just from a fundamental standpoint, it just makes so much sense for it to go higher. I mean, you can't take away 2 million barrels a day out of the supply and expect this thing to not go bullish. I
Yeah,
mean,
I mean the fundamentals are definitely there.
yeah,
I would say though that was what kind of drove us to do this.
yeah.
That news came out more or less, I think, like right here. So that is where that initial strength came from, and then this is where J.P. Morgan said it was going to go to 100 and suckered in a bunch of people off that headline,
Mhm.
and they enjoyed profit taking into that headline, I'm sure.
Mhm.
Um,
100%.
but yeah, I would say fundamentally too, like you guys got to understand where we are in like the geopolitical events of the world, right? Like the Russia Ukraine situation is still, and again, like I know it's been an ongoing thing for a while. Um, but if you would pay attention to some of the headlines, you would know that a lot of stuff is kind of gearing up over there still. Even China just today issued a statement to its citizens to get out of Ukraine. Um, so for China to kind of go out and say that, who has close relations with Russia, implies to me again that they know something. Um, and that Russia probably will continue to make some forceful moves this week, if not in the next like 2-3 weeks. Again, you also have North Korea out there doing some interesting stuff. There were some headlines that North Korea might be testing some nuclear warheads, and not warheads, but missiles that can carry nuclear warheads and whatnot this week. Again, so they've been shooting some stuff over at Japan. So there's just a few things going on in the geopolitical environment which will heavily affect oil. So I would much rather be an oil buyer than an oil seller in times like this, especially when again people are cutting production and so forth. Somebody said, Skag, how do you know a valid order block? So that's a good question. And so all first off, all smart money concept traders, Wyckoff traders, etc., will define valid order block differently. So for what you need to understand for me, right, in regards to my trading, what a valid order block is like this would be a valid order block, all right? And the reason why that this and only this is a valid order block in comparison to say this, right, would be that this is the climax low. So an order block for me has to be a climax low. So just gonna give you an example of using some of the stuff that I have over here, right? The order block has to live in structure like this. Let me just highlight that instead of drawing on it the same thing, right? The order block has to live at the climax low, the absolute lowest or the absolute highest points of a leg, right? It cannot by any means live here or here or here, right? It has to be the climax low. It has to be the protected low, because an order block by definition should not get invalidated, right? We can actually see here this got perfectly retested and it's a protected low, right? The market absorbed all the action inside of this wick, right? And created, again, what we have marked out as a protected low. When you're looking at, candles like this, right, which people call an order block, because again, it's an engulfing candle, and whatever reason those other smart money concept traders will create for themselves to call it an order block. Its location is what doesn't make it an order block. This is in the middle of a leg. Again, same thing here. Like, people would call this an order block. There are people that would call like this an order block. Like, these are in the middle of moves. These are not protected highs and lows. I use a different term for these. We use the term continuation block, right? Which is something that you'll probably only ever hear when I'm talking about it. Anybody else teaching what continuation block is more or less probably learned it from me and from my supply and demand course. So I'm pretty sure it's the only place on the internet where somebody uses those words. I don't care if other people use it. That's cool. That's irrelevant to me. I'm not out here trying to protect like intellectual property by any means. But yeah, an order block for me has to be a climax low. Anything else is a continuation block. And I'll also give you one more tip on why. The reason being is that these types of order blocks typically get wiped, right? You see how price here pushed above this area, right? Because again, smart money concept traders would have you believe that, again, this is the order block. And then the way that they'll show you on Instagram is they'll say, oh, you're going to go short at the 50% and you're going to put your stop loss. Again, everybody teaches it differently. Some people put it right at the high of the body. Some people put it at the high of the wick. We use the wick if we were going to be trading a real order block. But some people use like the body of the candle, and which, again, you can see that this gets invalidated. It's not protecting, right? It's used as liquidity. It's used as continuation liquidity. So yeah, it's just a little bit of sauce on how I view order blocks and continuation blocks. And I believe most smart money concept traders define it wrong, but that's up to them if they want to do that. And by the way, that all of you guys that said that the Canadian dollar is backed by oil and it's an export of theirs, were absolutely correct. My bad for not going back on that. Order block is same as support and resistance. Is it true? No. I mean, that's a tough question, because order blocks create quote unquote support and resistance. Is it the same thing as support and resistance? No, because support and resistance could be identified in many different areas with many different traits and attributes that don't necessarily apply to order blocks. But do order blocks create levels of support and resistance? Yeah, absolutely. They're protected highs and protected lows, but they're not like definable as the same thing. Support and resistance is a relative term to identify a zone. Yeah, exactly. And support and resistance is also was also coined by Wyckoff. They're Wyckoffian terms, for those of you that are unaware. Yeah. So Abel, Ray, what else we got, family? What else we got to go over?
Yeah, now that looks good for sure. I see somebody asked about GJ. So let's take a look at GJ.
You wanna take that?
Yeah, I could do it. That's fine.
I bet.
Let's see what we got here for GJ family. All right, so GJ is actually very, very interesting for a bunch of different reasons. But let's just take a quick look at this, guys, from a bigger time frame, daily perspective. I mean, just seeing what the overall flow of this market has really been, right? Besides me trying to analyze the market from a fundamental and sentimental perspective, guys, like if I'm coming down to a technicals, the first thing I always do is always go to the bigger picture. I want to see what the order flow of this market has been. All right, like what has been the order flow? All right, because then there's been a reason why the order flow is probably flowing in this direction. Now, there's a bunch of fundamental data guys behind why we've been experiencing this, right? In terms of central banks and their policies overall, in terms of monetary policies. The Bank of England over here, they have definitely been a lot more aggressive with tightening as opposed to the Bank of Japan, who hasn't been tightening at all. I mean, recently they started doing some type of intervention. They were talking about it, but for the most part, the Bank of England guys have just been a lot more aggressive, which has made their currency a lot more attractive to hold long term as opposed to the Japanese yen. But overall, I'm still very much bullish this, right? I'm still very much bullish, guys, pound yen. I think we're going to continue to actually go higher and higher. I don't see no signs of slowing down just yet. As long as the Bank of Japan guys is continuing with their approach in terms of how they're going to be dealing with inflation and all these good things, as long as they're continuing to be, uh, you could say, still printing, right? Still easing while everybody else is tightening, then we have to continue to expect, a weaker yen. If you look at all of these yen pairs, for the most part, like they all been, getting destroyed, right? The yen has been extremely weak overall, just because of the policies of the bank and just because of the interest rate and things like that, guys. So I'm still very much bullish, GJ. Now let's actually go ahead and really break this down to see what we can really get in terms of a technical perspective. All right, and see what we got here. So last week, guys, we ended up seeing a lot of bullish momentum come back into play, pretty much to finish out the week. I like that momentum overall. It definitely is very attractive, but I am keeping my eye on this level of structure down here, guys. This could be an area where we do actually go ahead and potentially target to capture some liquidity, before we actually do go ahead and continue going to the upside. So I am going to be keeping my eyes on this specific level down here. If for whatever reason, guys, we are able to see price come back down and clear this low, then I'll be very interested in looking for the rebound if we're able to rebound right back above that level of structure, right? So this is just, again, a more of a broad outlook on GJ, but this is literally what my main idea would love to be, all right? I would love to see this thing start to short, come down, clear this 159.3 level, find some demand for the pound, and then from there we go ahead and we rebound and start to go back bullish here for GJ, guys, because I am still bullish overall. I just think it looks like this thing could really start to set up for more of a turnaround, or at least that's what I would like to see. All right, I'm not really interested in anything too much, unless we do see some type of a pullback here. I'm not interested in looking for no real. I mean, you could look for buys here on a smaller time frame if you know what you're doing, right? Like maybe on the 5-minute, 3-minute, play this fill of this imbalance and things like that if you wanted to, right, in these lower time frames. But for me, I just don't like where we're at in terms of price, right? I mean, we literally are coming off a very bullish past week here for GJ. Is it possible for it to continue? It is, but I don't want to be getting it up at these levels, all right? Because if we're talking about premium versus discounted price points, all right, if I'm looking to buy something, I want to be trying to buy it as a discount, right, at a discount of the entire range. Okay, so when you hear people talk about discounted their premium price levels, at least this is how I interpret it and how I utilize it, right? We've seen a very strong move, right? So there's a lot of traders that were buying from down here, right? Smart money was buying from down here. Okay, the reason why I don't want to try to buy up here is because in order for these people to get out of these trades, right, that they actually bought from down here, right, they're going to need some people to go short, right? They're going to need some sell side liquidity to actually exit these buys, right? And since we're already such, at a premium level compared to the entire range, I don't want to be, this liquidity that they're using to actually exit these buys that they are already in, right? So I want to make sure that I'm not getting in at a premium price point while all the other smart money had got in at a discount. I want to try to align myself, or at least allow myself to get in at some type of a discount myself as well, right? So we would need to see some type of a pullback, guys, in order for me to really get involved here. I want to make sure that I do get in at some discounted pricing, right? How do we know it's discounted pricing? I mean, very simple. You can use your Fibonacci tool just to find out where the middle point of the range is, right? The 50% level. Then anything below the 50%, guys, is going to be considered discounted price points, right? So anything down here, is a very good opportunity for us to start looking for, that bullish reaction and then go ahead and go bullish back to the upside, right? So that's really going to be my outlook for GJ. Right now, we are creating these equal highs up here on the 1-hour time frame that we have to keep our eyes on. I know a lot of traders are probably looking at this like, man, Abel, look at these highs, bro. Could we sell from right here? I wouldn't sell from right there. Those highs are just building up a ton of liquidity, right? So we don't want to go ahead and just try to sell from right here. The only way I would be interested in some type of a sell from up here at these levels is if we actually run the highs, right? Grab that liquidity, and then we see an immediate push right back down into the range, right? Like some type of a rejection, right? Where we see the market push above the highs, but it got completely sucked back in, right? So if we see something like that, then, right, we might be able to go ahead and catch a move back to the downside, right? So that's something that we can keep our eyes on going into tonight, because there is a chance that we do actually just run these highs just to capture that liquidity that's sitting above these equal highs. But if we capture it and we actually rebound back in, then I'm gonna be looking to go ahead and go short and target back down to a bunch of these lows that we have all throughout here, right? These lows, I mean, these lows right here, right? All these lows, guys, are going to be potential areas where liquidity could have been built up around, right? So that's what I'm going to be looking for personally for GJ. You know, just looking to see if we can eventually set up for the long-term buy, all right? I really like the long-term buy, you know, especially if we are able to come in here and, you know, clear this low, even potentially clear this low, right? And if we see all the clearing of the lows and then we rebound, then I'll be very, very interested in looking for some bullish plays for sure, right? So that's gonna be my outlook for GJ, guys. It is one of my favorite pairs. Probably gonna be one of the ones I'm definitely gonna be keeping my eyes on going into this week for sure. So we'll ultimately see what ends up happening for GJ, all right, for sure. All right, so let's see what else we got. Let me go ahead and catch up with the chat. There's a lot of questions, I believe, for you, Skags, in the chat. I think you might have answered them already, but let's see. England Prime Minister fired their finance minister. In effect, yeah. I mean, that's definitely been something that we've been talking about last week as well. There's been a lot of turmoil, guys, in the UK. In fact, like this new prime minister, right, that literally just got in, right? I think her name is Liz Truss or something like that, right? Like she's almost on the chopping block, right? Like even the prime minister that they just brought in, like she's at a point where she might even lose her job, right? So there's a lot of chaos, guys, in terms of the government over there in the UK, right? There's a lot of uncertainty as to like who's really running the show and if they're running it correctly or not, and it's not bringing no type of confidence into that economy, into the market over there. So do not be surprised if we do actually see Liz again, who's the prime minister over there now, right? She was just appointed within the past month or two, right? Do not be surprised if she actually gets the boot, right? If she ends up getting fired, right? Because I mean, her first few things that she did, right, which was pretty much go through, you know, easing, right, pretty much turn the printers back on when they were tightening, like, pretty much contradicted itself. Like, it really made no sense at all. Those policies that they were trying to implement, and that's why there was such a negative reaction to it all, right? So there is a lot happening over there in the UK, guys, which we do have to be mindful of because it is going to affect the pound overall. But even with all that stuff that's happening in the UK, I still think it's just going to be still a lot more attractive to hold long term the pound as opposed to holding it against the Japanese yen. Right? At least, even with all the chaos in the UK over there, right? At least if you hold the pound, you're still able to make some money, right? I mean, the interest rate, you're still going to be able to get around 2-3% on your money, right? As opposed to holding the Japanese yen where there's still negative rates. You're actually going to be losing money by investing into that currency, right? So it just doesn't make no sense, right? So overall, there is a lot of chaos over there. We're still very much bullish, though, in my opinion. So we just have to see how the market really plays out. You know, again, we do these analysis, guys, just to give you guys an outlook of what we think can happen. But the real work really comes when you're actually watching us do this stuff live, right? Because us looking at it right now, in hindsight is 2020. I mean, yeah, 2020 is. I mean, hindsight is 2020 at the end of the day. All right, it's easy to mark up these charts after the fact, right? It's easy to even do it even before. But what does the market do it in real time? Currently in real time, right? Being able to react in real time based off current price action, based off momentum, based off like that's really, really the game changer, right? So without further ado, right, I say all that to make sure that we also go into a little promotion, guys, right? Because tomorrow we will actually be live for New York, and actually not tomorrow. I think we're gonna be live on Tuesday, right? Skags, you can confirm for me though, bro, if you want. We're gonna be going live every Tuesday, Wednesday, and Thursday, right inside of the platform. Was that the plan?
Yeah, so Tuesday through Thursday we'll be live. We'll only be live on Mondays or Fridays if there's news events.
Okay, cool. Yeah, so again, if you guys are not inside of this platform just yet, family, the Profit Society, it is a social platform, a social media platform for traders, right? By traders. So if you guys are not in there and you guys want to be on our live sessions, our live trading sessions where we're actually like literally trading live during New York session in real time, right? Actually executing in real time, entering positions in real time. Then make sure to go ahead and join. This is a free platform, guys, that anybody can actually go ahead and have access to. What we did with this whole platform is just we tried to create a community that people can be comfortable with, right? Where people can go to and actually ask questions, right, and get correct answers, and create the right connections, right, make the right network, build the right network, and things like that. So it's dope. And again, it is free, right? It is free, guys, and it's going to be free. Everything that you guys are utilizing right now on the platform is going to remain free. Okay, so just putting that out there. Now there will be some other aspects, right, that are going to be what we considered a premium upgrade, right, which will come at a cost. But that's stuff that again we'll be able to talk about later on, guys, when we actually get to that point. But for right now, it is free. So definitely go ahead and take advantage of it. Right now we have almost 600 people inside of the platform currently using it. It is pretty dope. As you guys can see, it pretty much looks very, very similar to Facebook, pretty much. Like literally very, very similar to Facebook. And it's fire, right? Like you guys can honestly even watch, the live stream right here on the platform. You didn't even have to come to YouTube, which is pretty fire, right? So make sure to go ahead and, join, guys. If you guys are not a part of it just yet, go to profitsociety.co, become a member, and we'll see you guys on the inside and on the live calls on Tuesday, Wednesday, and Thursday when we're really getting to the bag, right? So just had to throw that out there, family. Again, make sure to be a part of it if you guys are not part of it just yet. Right. But let's see what we got here, Ray. GU and Profit, if anyone took it.
Yeah, let me hop back on real quick.
Yeah, go ahead. Take over, bro.
I don't want y'all to be mad at me. I wanted to be respectful of everybody's time.
Oh
But
no. Listen, bro, we here to get the value, bro. So if you need us, you know what I'm saying? If you got the value, we all gonna take it.
but I ain't gonna lie, I took a short on GU at 124, and that thing is up right now. But maybe I don't know if anybody potentially, took EU. Obviously, I know I had the entry a little bit lower, but just understanding the concept of the internal range liquidity line right here being taken out is essentially what caused that reaction. So I did take a sell here, and on GU. Now, if this market does come up, because there are times where that first sweep of internal range liquidity isn't always the safest trade to take. So, I am break even. I did get a sniper on this trade. Now, if it just melts, then perfect. There is a chance that you guys can still get back in this because, again, that first tap at times isn't the most trustworthy. So there is a chance that we do come back, fill in a little bit of these candles up here, and there you do have a possibility of taking advantage of this trade. All right. Do just want to kind of at least, like I said, I am in this trade. I probably should have said something. I didn't want to interrupt or anything, but I do just want to kind of give you guys a little bit of pointers, so that way, you don't need somebody to tell you, hey, you should take this trade, right? But again, guys, let's just take a look at what's actually going on. We're sweeping highs, making new lows, sweeping highs, making new lows, and the fact that we swept this high here and then made these new lows, this right here is actually an opportunity for the sell, because obviously we have these weak lows here. None of those lows look very, powerful in my opinion, but we do have a high, right? So the highs that are sweeping, the lows that are creating, and then we push back up into this buy to sell candle, right? So as I come over here, I noticed that, we're sweeping highs again. So we sweep a high. Now we hesitate right here. Our hesitation off of demand, right? This is our demand zone because we have a low that makes a new high. So we hesitate off of demand, crossover bearish, right? So understanding that, I know that, I am currently bearish, right? So now I'm targeting lows, okay? Now I'm targeting lows. This can be a target. This here can be a target, but ultimately I'm targeting these lows here because I know that they shouldn't hold up. So, I'm short in this position right here for a nice, 1 to 10-ish type of trade. The market could go lower, but like I said, that one kind of got away from me. I took it, but like I said, I didn't think it would necessarily drop that fast. There is a chance you guys can get EU if it does decide to sweep that high for New York, or not New York, but for London. All right. But I'm just curious, did anybody by chance get in above the internal range liquidity line, or was y'all waiting for the entry up here? I'm just curious. Okay, Tory Hill say they're in EU. Okay, cool. Devin took GU. Well, you're in a personal mentorship. That's why you saw that. I'm talking about the people on the live. Um, okay, you still waiting. Cool, cool. So, shout out to Tory Hill. I see you. You said you took it. So, if you're in that, you should be good. You know what I'm saying? But again, even going back to the analysis, these were the weak highs that we wanted to see get taken, right? These highs here was what we were waiting to see get taken. So when they are taken, don't hesitate, guys. Just take the trade. So if this ever happens to you guys again, you understand what's going on. Obviously, I had the actual entry a little bit higher up here, but the fact of the matter is we did sweep those highs, which gives us a reason to sell, technically speaking. Now, if we do kind of respect one of these lows, I'd be curious to see if we can respect maybe this low, right? To pop back up one more time. Now, if we do come up and take this high, you can definitely, most definitely take a sell again. That is a hypothetical, considering that the market is dropping. I'm leaning more towards the sell side, but if it does pop back up by chance, that will be an opportunity for you guys to take. All right. So you may have missed it. You may not have. Just be on your hand, like, just be ready, stay ready. So you ain't got to get ready. If we do take these highs out right here, that would probably be the only way I take another sell opportunity, right? So we can react off of here, which we are doing right now. There's a possibility that the market could just continue to roll over bearish, but again, that is a possibility. All right. Um, Real quick, I do just like to scale through all my pairs. I have been cutting back on pairs, but at the same time, I do like to just look at all of them real quick, just to see if there's anything I can give y'all before the end of the call. Real quick. See what GA got for us. Not too interested in GA. Yeah, let's just be patient. I'm praying EU comes back for y'all. I really am. I would love for it to. So we'll see what happens there. All right. But I did just want to point that out. The internal range liquidity did get triggered. If it does come back, just be ready for it. All right, guys. So I just want to let you guys know, so that way you don't miss an opportunity if we're not on the call when it happens. All right. So that's pretty much all I got.
Nice. Yo, somebody do got a question for you. They said, do you have trading hours or do you just wait for price to get into your point of interest?
Um, I mean, yeah, I'll just wait for price. Honestly, I can't even say that I only trade London, because in this particular example, it's the middle of the, it's 9 o'clock where I'm at. It's 9:40, and I still took the trade. So I like to target London, or New York, I should say. I'm sorry, I meant to say New York. I used to trade London a lot more. Now I trade New York every day. But if the trade opportunity is there, I'm gonna take it. And here's the thing: we also got to understand, this is a 1 minute time frame that I'm taking this trade off of. So, what that pretty much means is, that's not necessarily a swing position. That could just me be taking a scalp. I could be risking 5 pips to get 20 or 25 pips. And with that said, I'm more than likely, if I'm trading in the middle of the day, I'm selling down to a larger buy or I'm buying up to a larger sell. So, I look for my swing positions in the times where there's more volume in the market in session, but I will take trades outside of session, but more than likely is going to be lower time frame scalps, right? So that's that. And I do want to just leave y'all with this, guys. You want to be able to monitor the way that you learn these concepts. I'm not sure how much everybody personal develops on this call, but I'm real big on PD, and you'll notice that a lot of the great traders out there are people that are very consciously aware. They understand how to think properly, they understand how to monitor their emotions properly, and that's something that everybody on this call needs to really understand and learn how to do. And there's the 4 levels of learning. I'm pretty sure a lot of you guys have heard this, especially if you guys are tuning in from MLM or whatever the case may be. But you just want to understand where you are in your development. Some of you guys may be unconsciously incompetent right now, and that just means that you don't know that you don't know. But the longer that you put the hours in, you're going to get to the point of being consciously incompetent, which means that at least you're aware that you're not where you need to be. And once you get past that stage, you get to the point of being, you know, consciously competent, meaning that you're making an effort and now good things are happening for you, but you still have to make that effort. And that's where consistency is key. Because once you are consciously competent for a while, a few weeks, few months, 6 months, however long it may be, then you get to the point to where you're unconsciously competent, meaning that you don't even know how you're that good. Like a lot of people ask you, oh, Ray, how you get snipers? How you do this? How you do that? And at some points, it's just kind of hard to even explain because I've been doing it for so long. But you guys want to get to the point where you don't even have to ask yourself to do certain things. So just respect your journey, man. Respect your process and do what it is you got to do, and understand where you are in those 4 levels, and that will help you, be patient with yourself and continuously, putting your best foot forward. All right.
Mm.
Somebody said, look at gold, Abel. I don't know if you trade gold. I don't trade gold personally, but
I mean, we could
you
take
want
a look at it,
to-
see what it's all about. I was actually looking at indices as well, family. All right, looking at NAS, and it's a very interesting play here. Just pretty much looking at what the market really has done overall, right? And then we could take a quick glance at gold after this, right? But I think that there's a good chance, guys, if we can go ahead and clear, this 10,900 level. I'll be very interested in looking for some short opportunities, guys, for sure, going into this week coming up for NAS, right? So, just something quick that I was just looking at. I think if we do go ahead and clear this pocket of liquidity right here, we could start to see a lot of selling pressure really start to come in, right? And I say that because I know a lot of you guys on the call like trading, indices, right? Indices has really blown up over the past 2 years, and I think a lot of people are really leaning towards becoming indice traders more than even just trading, regular forex pairs. So for all you guys that are looking at indices, at least for NAS, this could be a very interesting play. By the New York session, we'll be able to see exactly how this thing ends up setting up. But if New York session comes, guys, and we see some bullishness come in, it's probably just to target the liquidity, only for us to go ahead and shift back bearish, right? So that's gonna be something I'm gonna be keeping my eyes on for sure. Let's go take a look at gold real quick. See where we're at with it. Gold, right? So gold is another very interesting play here. We have been very bearish, guys. Gold ever since again the Fed started really raising rates. Ever since the Fed became hawkish, we seen gold really react in a negative manner, right? Off of them being bullish, right? Where in the past we were always taught that gold is a safe haven, that can protect you, right, against things like inflation, right, against things like a lot of uncertainty, fear, uncertainty, and doubt that's in the market, right? But ever since we had all this fear, uncertainty, and doubt, and then we started to see interest rates start to go higher. I mean, this thing completely did a U-turn, right? Like literally, the moment they started raising rates, this thing completely did a U-turn, guys. So again, similar concept. The Fed is still planning on raising rates, so we should still expect more continuations lower here for gold. Right now, a few things I'm gonna be keeping my eyes on. We are coming into this level of structure down here, guys, where we pretty much swipe these lows and it's seen a very strong bullish reaction, right? We are coming back into those lower levels, but I think, and this is just me, right? I think there could be a chance, guys, for gold to come back up. I'm very interested in gold right back up around this level, right around the 1663, 1664 level. If we are able to see gold come back up to here, guys, I think that there could be a chance for us to go ahead and really see some lower pricing here, right? Especially if we're able to come up, I would say maybe around the 1665 level, right? Just start looking for some bearish reactions in the market. In fact, yeah, like uh, I'll probably say around 1670s, right? Around that 1670 level, guys. Seeing how the market reacts around there could trigger some more selling pressure for gold. Overall, I do think that we will eventually see lower pricing for gold to come in, though. So that's what I'll be looking for overall. Let's see what else we got here. I see a lot of you guys are waiting for that EU. Okay. What would be the criteria used to pick a winner for the Euro Pound Challenge, right? That's a great question. So, honestly, we're really just going to be choosing the person with the most in-depth analysis, right? Because for those of you guys that are not inside of the Profit Society, every single week, guys, we are going to be doing a weekly currency pair challenge where we're picking a random currency pair of the week. And everybody that's in the actual community, everybody drops their markup. And it's not just a markup, right? If you're only sending your markup with no actual real analysis following it, then you're not going to win, right? Because we want to see like who's actually been paying attention, right? Who's actually able to come in and really give a detailed breakdown of exactly what could actually happen. And the pair of this week is Euro Pound, right? It was just a pair that I randomly selected just because it's something I haven't traded in a while, all right? And yeah, we have a lot of people actually, giving their ideas, giving their 2 cents on it, right? Like, look at all these, right? We have a bunch of comments, right? A bunch of different ideas, a bunch of different analysis as to like what can really, really happen, right? And we have even analysis like my guy right here, right? C-Max, shout out to my guy C-Max. Like his analysis is very in depth, right? Going from technical time frames all the way to fundamentals. He even started talking about the CFT report, right? CFTC report, right? Which again is a form to really figure out sentiment in the market, right? So uh, things like that is what we're looking for, right? It's just the person that has the best analysis, but it's also the person that's analysis actually does end up playing out. All right, so we'll pick the winner on Friday or Saturday. The winner is gonna win. We don't know exactly what just yet, but it's either gonna be either private one-on-one calls with, any of us educators, or you'll even probably win a funded account from either my Forex funds or FTMO or something like that, right? Just to really give you guys just some love, right? Just show you guys some love for participating. All right, so we are doing a lot, guys, in the background. So if you guys are not a part of the platform, right, and if you guys do want to be a part of the platform, go to profitsociety.co and then go ahead and drop your markup, right? Drop your markup, drop your analysis, and we'll see how that actually plays out. All right, so but just keep in mind, like, look at the types of analysis that are being dropped right now. All right, so make sure that if you do want to win, that you are throwing some type of real analysis into the equation overall. All right, so that's what we're gonna do. Let's see. Can someone please blow a kiss to confirm this is really live? You are hilarious, Jay. uh, let's see. I'll take another short from 0.9755 at EU for 2025 pip scalp. Let's see. You said from 0.9755. Hey, you do your thing. You know what I'm saying? You do your thing. You do what you feel like is makes the most sense, right? But you guys already heard Ray's analysis. Skaggs broke that down as well. Now it's up to you to actually execute. All right. Let's see. Is it too late to submit my analysis? Oh, it's not. Right? It's not. You have all the way up until Friday to submit it. Right? You have all the way up until Friday. So make sure to join the platform. Make sure to join the challenge, and me and the team will be, picking a winner on Friday. Right. But besides that, family, we do appreciate y'all. We love you guys so much. Thank you guys for rocking with us. It has been another phenomenal weekly outlook. Another 2-hour long session stream. And we do these every single Sunday for everybody that's new to the channel. Big shout out to all of our newest subscribers. We actually had a ton of you guys subscribe to the channel today, right? So we appreciate y'all. Hopefully your subscription simply means that you were able to gain value from us. And we look forward to continue to give you guys a lot more value moving forward, right? So On behalf of the Profit Society team family, we appreciate y'all. We love you guys, and we'll see everybody inside of the platform. All right, because that's exactly where we're about to go to next. All right, so family, appreciate y'all. Love you guys, and hope you guys have a great rest of your guys' night. Let's get it, y'all.